We're facing a perfect storm of seasonal volatility and some really alarming jobs numbers, as every single piece of jobs data last week came in much worse than expected. The technology sector of the S&P 500 hasn't moved in almost 2 months. You can see here that the US economy has barely added any jobs in the past 3 months, as big tech companies have already laid off over 100,000 people this year. And so now for the first time this year, there is a 100% chance, at least according to the market, that the Fed is going to cut on September 17th, 89% chance for one 25 basis point cut, 11% chance for a 50 basis point cut. And of course, I'm going to share with you all of the events that you need to watch out for this week and go over the charts and show you the critical moves that I'm making in order to protect my portfolio and maybe even profit from the upcoming volatility that I still expect in September and October. As always, I hope this video helps you. I respect your time, so let's cut right to the chase. So last week was a big jobs week data. Negative JOLTS, negative ADP non-farm payrolls, higher unemployment claims, and negative non-farm payrolls. It was a rare week in which every piece of jobs data coming in was worse than expected. And 2025 is just gearing up to be absolutely terrible as it relates to jobs. You can see here the jobs created in 2022 versus the jobs created now in 2025, with this steady downtrend right here. The US economy has barely added any jobs in the last 3 months, and big tech companies have laid off over 100,000 employees this year. You can see here Salesforce, Intel, Microsoft, HP, as well as Meta, Amazon. And even though the stock market, as I've said before on this channel, it looks like what we saw in the late 90s, basically a replica of what we've seen in the late 90s, where we had the dot-com boom, and now we're obviously dealing with the AI boom. Things look very similar if we're looking at the stock market charts. In blue is 1998 and in red is 2025. However, the jobs market in the late 90s was very different to what we saw now. There was actually an increase of jobs as the enthusiasm around the dot-com bubble increased. If we take a look at the unemployment chart, you could see here in the late 90s that unemployment was actually going down. It was not trending up. So this is really the first time in history where companies are recording record profits, where the economy is seemingly still doing good, but we are losing jobs, and a lot of analysts are saying that obviously a lot of these jobs are being lost due to AI. This is really unprecedented territory and something that we actually have never dealt with before, which is why even if you take a look at the unemployment chart, you can see here it's now been 28 months since the unemployment rate low in April of 2023. Since 1950, the prior shortest period between the low and a recession was 16 months. The average is 7 months, and now we are on the verge of 28 months since the unemployment rate low. So we are dealing with a very different type of phenomenon here. Now, before I get into the charts and talk about what I see on the technicals, as well as some of the juicy setups that I'm eyeing this week for potential swing trades, let's take a look at what is on the calendar for this week. So consumer credit on Monday, September 8th, optimism index on Tuesday. Both of these are not that important compared to what's coming up after. So we have PPI, core PPI, as well as CPI on Wednesday and Thursday. This is very important. I'll tell you why in a second. And then we also have initial jobless claims and consumer sentiment. And next week we have the FOMC. So why is CPI really important? Well, it's because it is going to tell us whether the Fed's hands are tied or not. So as you guys know, the Fed has a dual mandate: maximum employment and stable prices. Now, both of the solution to both of these things are opposite, meaning in order to maintain stable employment, you have to cut rates to put less pressure on corporations. But if we are dealing with potential inflationary threats, then you cannot cut rates, because cutting rates means that you increase inflation. So all eyes will be on CPI to tell us whether inflation is actually increasing. And the danger here is if we're starting to see cracks in the employment system, but we are also starting to see inflation threats rising. We are getting that will put us in a point of stagflation, where the economy is worsening, but somehow prices are still at a runaway level. Now, I believe the Fed is under massive pressure from all angles, so they will for sure cut on September 17th. The question is, are they going to cut by 25 basis points or by 50 basis points. And the CPI will tell us a lot about how the Fed is likely to act. If inflation comes in much lower than expected, then the Fed actually has leeway to do a more aggressive cut and try to get ahead of the really bad jobs numbers that we are now starting to see. If inflation comes as expected, or God forbid, slightly higher, then the Fed can only, in my opinion, stick to 125 basis point cut. So obviously, we will be live streaming the CPI for you this week as well as the FOMC next week. Now, let's get into the technicals and the potential swing trades, because I think that there are some stocks here that have some really nice patterns that we could potentially leverage for profits. But before that, I just want to take a quick little moment and shout out our member Jazz, who has had her best week to date. She has a 50K Top Step account and is up 32K on that 50K account. This is extremely impressive. She's been joining the live streams every single day for 2 years and has finally started to see major breakthroughs in her trading. And if you want to trade live with me every single morning, obviously we focus on swing trades as well as long-term investments, but we also do focus on day trading in order to make additional income or have the potential to make additional income to invest. Click the link below and join the group. Live stream with me every single morning at market open. Okay, so here are the setups that I'm looking at. I went over this setup with you over in my last video. XLK, this is the technology sector of the S&P 500. Typically consolidating at the top here, especially if we're forming a head and shoulders as we see here, is not a great sign for mega caps. Most of the time that we spend 2 months or longer consolidating, we tend to see a pullback or correction. You can see all of the times that we spent months consolidating at the top and what happened thereafter. And if we take a look at the major chip stocks here, you can see AMD, here's Nvidia here. These are chip stocks that are obviously leading the way in terms of the AI revolution, as well as the AI stock market bubble. And you can see that there's now an acceptance that these midterm trends since the April bottom have been broken, which to me give us a sign that we are in correction territory in some of these stocks. As a matter of fact, AMD is now down 19% from highs. And if we take a look at Nvidia and measure this, we could see that Nvidia is down 10% from highs. So both are in official correction territories. Did I say official? Official. What the hell's wrong with me? And if we marry that with what we know about in terms of September, you can see September being the worst month for the stock market since 1950, the past 10 years, the past 20 years, and in post-election years, September is the third worst month. One interesting thing that I found, though, is when we have a green summer of at least 5%, meaning June, July, and August, give us a 5% rally. That tends to push some of the bad news from September to October. September is still not a great month with an average of 0.3% after having a green summer. However, October is almost a minus 2% month on average. But given the fact that we have inflation data as well as the Fed cut decision, I'm willing to bet that volatility sticks around for September. Now, in terms of what the net for September will be, I don't know if it'll be severely red or if it'll be flat, but I do think that volatility is here to stay for the next 2 months at least. And I just want to point out that if we take a look at the SPY monthly chart, that bearish divergence between the RSI and the price on the monthly chart is still valid, where the price is making a higher high and the RSI is making a lower high. And as I said to you in my previous videos, that if the RSI gets above 74.82 on the monthly, then this bearish divergence becomes invalid. But so far, it is still very valid and very present. All right, now let's take a look at some of the lucrative, juicy setups that I'm eyeing for this week for potential swing trades. Apple broke out of this downtrend. I gave you guys Apple, told you that I was entering it at 200, still have those leaps, still have those shares. Now there's an Apple event coming out on April 9th, and it's going to be an announcement of what products are going to be included for the next iPhone upgrade cycle. They have been pretty mum about their AI, and I expect them to have a major announcement with regards to Apple Intelligence. Now, sometimes these events are sell the news events, or we don't get a ton of movement. But if we can pull back on Apple just a little bit, if we can pull back and retest a previous high, obviously it will depend on where we pull back. It will depend on the setup after the announcement. But if say, for example, we pull back to retest this previous high here as support now, I do think that Apple still has room to get to that 249 level, as well as the all-time highs at 260. To me, this is an inevitable tech setup here, and I think that it's a very high probable setup if we can catch the pullback on Apple. Now, on to the most divisive stock on the planet. Maybe Palantir takes the cake, but certainly in the top two. Tesla, this is a stock and a setup that I continue to see funny comments about, clowning the fact that I said that Tesla is going to likely retest that 367 level. We now hit a level of 356, ever so close to visiting these equal highs at 367. And I think Tesla is a week or two away from getting to that level. We are already seeing a wave of downloads of the Robotaxi app. And now we are seeing if you look on X, there are a lot of people who have taken robotaxis now, comparing the price to Ubers and Lyft for the same ride. Now, I think that this is a little premature because obviously as the robotaxi gets more popular and opens up to more locales, I don't think that the price here for robotaxi, I don't think that this price is static. Obviously, right now they're operating at a low cost because they have a very limited range. They have a very limited fleet. But it is, I think that it is safe to say that Tesla can price the robotaxi rides less than Uber and potentially less than Lyft in the future. I don't know if it'll be this cheap. There are also talks about Elon's pay package. Obviously, if Elon gets that massive incentive, then there is an inherent incentive for him to stay at the company and hit those goals in order to receive that pay package and a larger control over Tesla. Obviously, he's also talking about the future of Tesla being in robotics and not really in cars. So he's trying to shift the narrative away from the bad delivery numbers and the declining sales and, focus more on the autonomous driving as well as the Optimus robots. And as long as he can do that successfully, then Tesla can be priced at whatever multiple, in my opinion. Because if it's no longer seen as a car company and, he can convince the market that it should be priced as a robotics and AI company, we know that those trade at insane multiples as long as they continue to roll out proof that they are in the path of what they are focusing on, or as long as that they're releasing products and releasing services that are aligned with what they're telling us the roadmap is. Now, I will be very curious to see what happens if and when Tesla gets to 367, because if we break above and close, then I think that there is an additional swing trade if we retest these equal highs as support, because these equal highs have been so strong and so hard to crack that once we crack them and close above them comfortably, if there is a retest, then I think Tesla can start attacking some of these high prices at 460 and close to 500 in the next few months. Gold is a setup that I gave you in my last video, and I said that gold here has a quadruple top at this level. And I think that gold will break out, and it did break out. And if we get a retest of this level, then I think that gold can march towards that $4,000 price point. Now, if we take a look at what happens during rate cutting cycles, you could see here that after major rate cuts, gold tends to surge by a wide margin here. You can see the rate cuts in 2008. You can see the rate cuts that happened in 2020, and you can see the rate cuts that are about to happen now. So I still think that gold can break out, and I still think that $4,000 for an ounce of gold is not out of line. Robinhood is now officially going to be in the S&P 500. I told you guys that the rebalancing announcement would be on Friday. Now, I did trade a strangle, not straight up calls, but buying a call and a put, because the expected move on Robinhood was actually much less than I thought it would be. But you can see here that Robinhood as well as AppLovin were both announced as additions to the S&P 500. Both will be added on September 22nd. I showed you what happened to Coin after it was added to the S&P 500, as well as Palantir. In my opinion, if we are going to get a bump up in price just from the announcement, but on a retrace, that is the time that you want to pounce on Robinhood, because stocks that enter the S&P 500 are typically, I think the last time I looked, it was somewhere above 95%, but are always higher than the price that they entered the S&P 500 at. So I entered a 25 delta strangle, buying the 107 call and the 95 put, because I thought that there was a chance that I'm not a fortune teller, so there's a chance that Robinhood doesn't get entered in the S&P 500, and the expected move was $3.70, which means that I thought if Robinhood wasn't included in the S&P 500, it would drop by more than $3.7. And if it was announced that it would enter the S&P 500, it would rise by more than $3.7. So it was worth it for me to take the strangle. It expires September 12th. I'll see what happens next week. And the last swing setup I'll leave you with is BMNR. This is Bitmine Immersion Technologies. This is the Ethereum fund that Tom Lee heads. Now, you could see this steady decline here on very low volume, and on the up days, we had very large volume. And so this is the type of setup that you want to see when you are expecting a breakout. Now, I'm tying this to the Ethereum price. And if we take a look at Ethereum, it is behaving in the same, very similar way to BMNR. But if Ethereum can trade lower to one of these weekly imbalances, but if Ethereum can trade lower, take out these equal lows and put BMNR in this gap down here, then I will likely entertain a long on BMNR. Still not in a position here, but I do think that this will be very explosive once it sets up properly. And just to summarize, I do see some weakness and volatility in September and October, especially in the mega cap ETFs, QQQ, XLK, etc. And this clean head and shoulders here on XLK, in my opinion, is worth trading to the downside with a very tight stop here. I think that if we do end up seeing some volatility and we get correction type activity in the mega cap tech stocks, then this will pay off pretty big. And if it doesn't work out, then the pain will be very limited, in my opinion. If you are only interested in investing, in long-term investing, you're not interested in swing trading or day trading, that is still $35 a month, but that price is going up to $50. So if you are only interested in investing and you want to lock it in, make sure that you join us below. Otherwise, if you want to trade live with me every day and you want access to all of my day trades as well as my swing trades, you have to upgrade to the Traveling Trader Premium tier and not just the investing only membership. Look forward to seeing you guys there. If you got anything out of this video, give it a big fat thumbs up. Let me know what you're trading. I want to hear from you. Leave it down in the comment section. What are your favorite setups right now? Also, what are your thoughts about the market? Are you shaky about this market? Are you confident? Are you still investing heavily? Have you pulled out? Are you in cash? Would love to hear from you. Subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.